Hello and thank you for joining us on Islamic Finance Weekly, where we discuss the key developments in the industry and opportunities for Nigeria to tap into. My guest for this edition is Mrs. Adeola Sunmola, a lawyer who specializes in banking and finance, including Islamic finance projects and infrastructure. Also, she's a partner at Udo Udoma Osagie. Good to have you on this program, ma'am.
Thank you, Bukola. It's good to be here.
Thank you, ma'am. First and foremost, can you give us an overview of the regulatory framework around Islamic finance that makes it a viable alternative source of financing?
The Islamic finance ecosystem is broadly split into many parts. We have non-interest banks, such as the Jaiz Bank PLC and Taj Bank. We have Islamic finance windows, such as the one that is being run by Sterling Bank PLC. We have takaful institutions, or institutions that operate takaful, which is the Islamic finance equivalent of insurance. We have asset management funds, which offer non-interest finance instruments or products to their clients. And then we have capital market offerings such as Sukuk, which is the equivalent of Islamic bonds. Now, speaking about the regulatory framework, in terms of the non-interest bank, the sector regulator is the Central Bank of Nigeria, and the Central Bank of Nigeria is empowered under its statute, which is the Banks and Other Financial Institutions Act, to regulate financial institutions within the country, including specialized banks and other financial institutions, which is the category where Islamic banks fall. And on this basis, the regulator of non-interest banks, such as the ones that I've mentioned, is the Central Bank of Nigeria. It is pursuant to rule that it issued guidelines for the regulation of non-interest banks in Nigeria. In relation to the non-interest banking sector, this sector is regulated by the Central Bank of Nigeria pursuant to the powers that it has under the Banks and Other Financial Institutions Act. And it is in furtherance of those powers that the Central Bank of Nigeria issued regulations and guidelines for non-interest banks in Nigeria. With respect to in insurance, takaful operators also do have guidelines that were passed by the National Insurance Commission, which is the regulator of the insurance sector in Nigeria. And these guidelines provide an overview of the basis on which takaful operators can operate within the sector. In terms of capital market offerings, the Security and Exchange Commission has rules and regulations for the establishment of asset management funds that provide Sharia-compliant instruments. The Securities and Exchange Commission also has guidelines that regulate the issue of non-interest offerings such as Sukuk. It's globally accepted that non-interest finance promotes financial inclusion because there is a huge part of the population that requires investment in what they consider to be compliant instruments. And those compliance instruments are instruments that are, in their view, aligned with their beliefs. Let's take the northern region of Nigeria, for example. That region has a huge unbanked population. And so that population requires an asset class that aligns with their beliefs and which they are comfortable with in terms of investment.
Thank you very much for that. So how will you describe the support of regulators from SEC, CBN, to self-regulatory organizations like the Nigerian Stock Exchange and FMD OTC Exchange for the growth of the non-interest financial market space?
Okay, I would say that it's work in progress. About 15 to 20 years ago, we didn't even have regulations. We didn't have a proper regulatory framework. But that has changed with the passing of some of the regulations that I've mentioned, the CBN guidelines, the NICOM guidelines, the rules and regulations of the Securities and Exchange Commission. All of these are aimed at supporting the sector and the ecosystem. Speaking about support
from the regulators to the
yes,
self-regulatory organizations.
Yes. Number of examples. There is this biennial conference called the African International Conference on Islamic Finance, which I have attended in the past few years, and I see that a lot of these regulators are in attendance and they do participate in one form or another. Another example is the IFN event that the Nigerian Stock Exchange co-hosted with the Islamic Finance News last year. And there are all other initiatives that some of these regulators have propagated, all with a view to supporting the sector and improving on this asset class as a viable means of investment for those that desire it. Also, in terms of support, another example I will give relates to my experience on the FGN Sukuk issue.
The federal government Sukuk?
Yes, the federal government of Nigeria's Sukuk issue. We've had 2 issues, and we're now on the third one, which will be issued this year. And my experience on all of these transactions has been one of collaboration. There were instances where there was very little or no clarity in our laws in relation to how to deal with certain things. And when we did approach some of these regulators, be it the CBN or the Securities and Exchange Commission or the Federal Inland Revenue Service, they were supportive. In some instances, they provided the clarity that we desired. And in other instances, the actual request was for exemptions from compliance with some of the rules and regulations that they had on the basis of the nature of the Sukuk issue, and they were cooperative throughout the process.
So Nigeria has a huge infrastructural housing deficit and needs capital to address it. From your view, what do you think the regulation should do to provide financing for the long time?
As I said earlier, it's work in progress, and the regulators need to continue to support the sector, whether in terms of providing clarity in relation to the law or in terms of providing support to stakeholders, or even in terms of responding to feedback from the sector, from the ecosystem in relation to what it is that can be done better. So I have an example in relation to pension fund administrators. Previously, pension fund administrators were limited in terms of the scope of investments that they could make from their portfolio of assets. But that has changed. In 2019, the Pension Commission of Nigeria issued guidelines that provided clarity in relation to the threshold of investments that pension fund administrators and custodians could make from their portfolio of assets. Those guidelines also permit contributors to request that part of their contributions be invested in non-interest compliant instruments if those instruments are the ones that they are comfortable with investing in. So I think that it's work in progress, and I see the regulators responding more to feedback from the ecosystem in relation to how to move the sector forward and how to do things better.
From the recent report, Nigerian housing deficit is 22 million plus. Are there any products on Islamic finance to use on deepening this?
Yes, I think that those products exist, but the challenge with housing is also a regulatory challenge. Because of the way the equivalent of Islamic finance mortgages are structured, there is a lacuna in the law in relation to how these products can be made. And so, recently we were at a forum that was organized by Sterling Bank of Nigeria PLC. And one of the discussions at that forum was how to ensure that non-interest banks take over mortgages that were previously provided by conventional banks. And one of the things we discussed there was how to deal with the regulatory bottleneck in terms of seeking and obtaining governance consent first at the level of the owner of the asset, which is the mortgagor, and secondly at the level where the non-interest bank will provide the facility or will provide the funding for the acquisition of that asset. So these are some of the things that, you know, the participants in the sector are still looking at, but hopefully we will be able to come together with a solution that works for all stakeholders in the near future.
Thank you for that. So what should the regulators do to improve awareness and acceptance of non-interest finance market space in Nigeria?
I would say that regulators should continue to support the sector. As I said, my experience in the course of advising on the federal government of Nigeria's Sukuk issue was a positive one. All the regulators that the advisors approached to provide guidance or clarity in one form or the other were cooperative, and they did come back with positive or with useful solutions to the problems that we were trying to deal with. So I think that that's the approach that all of the regulators should take in this sector. I know that a number of these regulators do provide capacity building initiatives, and I think that they should be encouraged. For example, the Federal Ministry of Finance, in collaboration with COMSEC, organized a training and a study tour last year. I participated in that, and it was very useful because the first phase of that initiative involved us being in a classroom where we had a facilitator that, you know, discussed several instruments that are utilized in the sector for completing transactions. And then the second phase entailed a study tour to Malaysia, where we met with relevant participants in various parts of the ecosystem, from the Bank Negara to the Malaysian Securities and Exchange Commission to the Islamic Financial Services Board. And, you know, those sort of initiatives are useful in terms of building capacity. And because there wasn't restriction in terms of who could participate, the faculty was quite broad. So we had officials from the Central Bank of Nigeria, we had officials from the Federal Ministry of Finance, officials from the Pension Commission, and there were also personnel from some of the Islamic banks, such as Jaiz Bank and Sterling Bank, and other private sector participants such as myself. So I will encourage regulators to continue to do that in order to support the sector and to ensure that we have sufficient capacity in terms of knowledge, because we do require knowledge in order to move this sector forward.
What can you say from the two Sukuk issued by the federal government in 2017 and 2018? What are the learning points from it, and how will Nigerians benefit from this third Sukuk about to issue this year?
There are a number of learning points. Many of them are administrative in nature. For example, after the first issue, there were complaints by investors that they didn't receive their certificates or certain notifications from the registrar on time, but all of those issues have been addressed, and we didn't see those issues coming up with a second Sukuk issue. The two issues, the first and the second, were oversubscribed, which
in terms of the investors' participation,
yes, which says something about the appetite of Nigerians for investment of instruments within this asset class. So far the process has been, I don't think the process has been daunting. There haven't been any challenges that we haven't been able to overcome. The third issue will be for a value that is significantly higher than the first and second issue, but I don't foresee any challenges even with that. And like the first and second issues, I suspect that even the third issue will be oversubscribed as well.
So how will Nigeria benefit from it?
In terms of how Nigeria benefits from it, one of the things that we need to know and we need to remember is that the proceeds of the Sukuk have been and will be utilized for the construction of roads across 6 geopolitical zones within the country. So that's one benefit. You know, I've had people ask me questions about roads that were constructed with the proceeds of the Sukuk in the eastern region of the country, and I've had people ask me about roads that were constructed with the proceeds of the issue in the southern part of the country. So in terms of how Nigerians benefit, that is one clear way of benefiting, because you know this asset class is being utilized for infrastructure development of roads, and there is no bias in terms of where these roads are located. It's spread across 6 geopolitical zones within the country. One of the positives of the Sukuk also is accountability, because the way the Sukuk has been structured, there is a level of scrutiny in terms of the projects, scrutiny in terms of how the proceeds of the issue are being utilized, and scrutiny in terms of what the contractors are even doing. So are the contractors meeting their milestones? If they are not meeting their milestones, are there any penalties within the framework of the transaction documents? What are they required to do in order for the contractors to even get funding to complete the project? If a contractor doesn't complete a certain milestone in relation to any part of the project that has been allocated to such contractor, is he able to receive funding? All of these issues are addressed within the framework of the transaction documents, and I think that provides a level of accountability that we do not see in conventional finance all the time.
What is the outlook for the non-interest market space in 2020 for Nigeria and Africa?
I think that we are likely to see a lot more sub-sovereign issue. So far, it's only been Osun State that has issued a Sukuk, but I see that a number of states, especially in the north, are interested, and I think that in the next 1 or 2 years, some of these transactions will be completed. I think that many of the states are looking to raise capital for infrastructure projects, and they are looking to raise this capital from the non-interest finance segment of the ecosystem. So that's why I think that some of them will look to Sukuk as a viable instrument for raising such capital. In terms of prediction, I also think that with Jaiz Bank's progress in the sector, recently they got a rating from, I believe, Standard & Poor's or one of the other rating agencies, which shows how well that institution is doing. And I think that on this basis, a number of investors will be interested in actually establishing non-interest banks in the country. So I think that we will see more activity within that space as well.
For more investor participation in this third Sukuk to be issued this year, how do you think you can engage the millennials to participate?
I think it's all about communication. I see that for many of the non-interest financial institutions, their communication is more liberal now. in terms of even what they put on social media. When some of these institutions are advertising some of their products on social media, I do see now that the communication is a little bit more liberal and also aimed at ensuring that the target market has an understanding of what the product is and what the institution is trying to say to its target market. So I think that they just need to improve on that, and they also need to look for more innovative tools, all aimed at ensuring that financial inclusion is achieved.
Thank you very much, ma'am, for your contributions. And that will be all for this edition on this program. You can send questions and comments to news@poshnd.com and reporter@poshnd.com. Also, you can engage us on our social media handles displaying on the screen. Many thanks for watching, and bye for now.